as we go through the evening. Going to grab screen straight away and have a bit of a look at this market. It has been another, for mine, interesting and slightly unusual week. We'll get on to next on to Julian's macro market overview. For those that have just come out of his Trader Cafe session, I do hope you've got heaps out of it. Like a really good session to me. Do hope you guys have got all you can from it. But an interesting week for mine. You know, we have these, I think interesting week. So we'll go back to dollar index. We'll blow it up a little bit. If Zoom will get this bar out of my way, so I can do. I like dollar index. 3 big up days, 2 average down days, and overall, from where we started, a nice move up. Certainly not a dominant day for the week for the US dollar, but a week where it's gone up. NASDAQ, 5 buying days in a row, 1, 2, 3, 4, 1 small down day, and 4 up days on the NASDAQ. US 500, 3 reds, 2 greens, finished not far from where we started. Gold, 4 downs, 1 up. Finished a little bit down from where we started. Oil, my gosh, oil. The other way with oil. 4 reds, 2 of them big, 1 up. Decent sell-off on oil during the week. Bitcoin hasn't updated for the weekend. Fusion servers are down. Second time it's happened in a month. I don't go much longer. They're pretty good, those guys. I won't like this not working, but again, 1, 2, 3 red days, 2 green days. A little down from where we started the week, but not too far down. And certainly, my understanding over the weekend is continued to buy and pushed up a little bit. And ETH, very similar, very similar. 3 down days, 2 up days, but finished off not too bad, ETH, in a reasonable spot for those that want. It doesn't all make a lot of sense to me, Julian. This is the one that confuses me a little bit. US dollar bullish. I would expect this to start and play out a little bit, and some correlation between this and other prices that doesn't seem to exist right now, which does surprise me a little bit. Market does seem to be making its own way. I'm really looking forward to your macro market overview and a chance to have a look at the macro picture and see what you think is driving these behaviors. Over to you, Julian.
Thanks, Paul, and hello, everybody. Welcome to another trading show. Oh, crikey. Lockdown here, still alive and kicking with me. Hey, look, guys, let's get straight into the charts. I want to just make some comments. From a macro overview point of view, I'm not seeing a lot out there right now, which is any different to the views that I've had for some time. The most important thing for me is this chart now, ignoring the decimal place. This is the chart of the 10-year note yield. It still yields 1.55, as it has done for the best part of most of this year. Yeah, we've had some ups and downs, but it's still yielding 1.5 with inflation. I do believe, Paul, inflation in the US went to almost 6% on a year-on-year basis recently. That's still month on month. It's still slowing the decline quite considerably, and I expect that inflation rate to come down. But really, for me, there's a massive red flag, and I can't get in my head this disconnect. Okay, we keep talking about these bond yields, guys. And the thing about inflation is transitory inflation can last for quite some time. So is it transitory? Yes. Can it last for a while? Well, absolutely. And what does that look like? You know, we know that there's some wage settlements going up in the States. Are they one-offs? I think what's really interesting is what's going on with industrial production around the world, most notably in China and in Europe. I know that there's, the pandemic is coming back. We look to be getting some kind of 4th wave hitting Europe at the moment. That's not good. That will have an impact on the way things are done. But the reality is that the industrial production figures are slowing down. What isn't slowing down is the enthusiasm of the stock market. Now, what I see here is a disconnect between the bond yields at 1.5 and the inflation rate of 6. Something's odd. Something doesn't make sense. Something really has to change. Now, as we saw this week, let's get straight into some of these markets. What I'd like to try and do, we can talk about, oil and gold are going to be handled by Ainslie and some of the other guys. I want to take you on a quick tour of some of the sectors that I look at in the US stock market. And those of you this is a weekly bar chart. And for those of you interested, just follow what you're seeing here. Maybe I should put a candlestick up on this just to make it a little bit more homely for those people who aren't necessarily the bar chart followers. So this is the oil and gas sector, right? So we've seen a big run up in oil recently. What's going on in the underlying? These are the guys who are selling the shovels, who are doing the drilling. What are we seeing? Well, we're seeing the market trading at almost the lows of the year as a sector. So I don't think that's particularly bullish. When you look at materials, now we're seeing some things, right? So the materials sector, that's trading near all-time highs, but we've had a crappy week last week, right? And for those of you that don't, that haven't really thought about this too much, Paul was talking about new highs in the NASDAQ. If we go and look at the daily chart on the Dow Jones, this has been in a bear trend now for almost 2 weeks, by the way. Like, yeah, it came off a big ball, and maybe somewhere in here is an opportunity to buy it. But the key thing is there's been a sector shift away, right, from some of these stock markets. Let's go look at some more. Communications, terrible few months. The energy sector, XLE, my favorite ETF, because I think long term it has real value. That's had a terrible week. The financial sector, so for so long, the leader, look at this big rally up. That's now had 4 down bars. Okay, you guys are getting the picture here, right? The industrials had another bad week. Technology, here we are. So we're back on the same gig again, right? We're back on the Apples, we're back on the Amazons, we're back on the Googles again. It's all the technology stocks, all the already highly valued technology stocks. Throw in some retail market. Oh no, hang on, because they had a terrible week too. They're no better off than where they were a few months ago, right? The real estate sector, no better than where it was a few months ago. Utilities, nightmare all year. Stay away from them, because apparently yields are going up, but are they? Right? Consumer discretionary, that's the one that's been doing really, really well just recently, right? So that must be coming out of pandemic. The whole world's coming out of pandemic. What's the future holding for that? I think now that we can see industrial production slowing down. But anyway, let's park that. Metals and mining, nightmare week. Oil and gas exploration, nightmare week. Semiconductors, a bright shining star. We're getting the picture here, right? So this is a tech and semiconductor market at the moment. And then finally, transportation had another crappy week after having had some good weeks, still trading near all-time highs, still gonna love it, right? So here's some of the things, right? Everybody's still getting their boxes. They haven't all arrived yet before people stop ordering as they go back to the office. That's very clear in my mind. We'll see what happens if industrial production is slowing. Doesn't that surely mean at some point that the boxes are going to slow down as well too? We will see. But the key thing for me here and all of this, right, is that this is a play for the technology stocks. So the number of stocks that are doing well at the moment versus the number that are just marking time appears to be getting less and less and less. This is traditionally a game what you would find in a potential market top. I know I'm sounding like a broken record to all you guys out there. And if you're trading Amazon or you're trading Apple or you're trading Tesla, you're just sitting there laughing at me, and I get that. And I appreciate that. I don't tend to have such a concentrated portfolio. If you're looking at a more broader market overall, you've got to respect the fact that probably not all of it is trading that well. Maybe reflecting the fact that in the real economy, things aren't quite what they seem. And also reflecting the fact that I don't think we're going to a hyperinflationary environment. And actually on that, right, I just want to clear a couple of things up here, right? When people talk about inflation, we've got to be really careful of the language, right? Hyperinflation, there's actually a definition. There's an economic definition for hyperinflation. It means more than 50% inflation per month. Okay, I don't think we've ever had hyperinflation in the States. Maybe we have in the long, deep, distant past, right? Even the 1970s, where inflation was running at 15% per year, it was nowhere near hyperinflation. So people have to be a little bit careful on their language. Are we having a sustained, a secular inflationary move? Well, I believe that we're not. I believe that we're going to go back to relatively low inflation at some point in time. Mostly because it's connected to government largesse, and also to the fact that I think that there really is not as much money around as people think there is right now. I know there's lots come into the system, but there was a big demand for it. What will be very interesting will be to look at everybody's figures from an economic point of view when some of these commodity prices settle down a little bit. As we've seen, there's been some significant falls in the energy sector in the last few weeks. Natural gas has had a fairly aggressive move lower. Coal has had a crazy move lower. Okay, we'll get back to this whole thing whereby the market is, right, just the numbers look very high. The value of imports and exports looks very high simply because if they're invoiced in dollars, they cost a lot more because commodity prices have been going up. But volumes, as we saw last week in the analysis I did, are not tracking anywhere near as well as the absolute value for those things. Okay, and yeah, I'll probably skip that. So my overall sense here is that I still maintain this has got the ability to be an analog of 2007, and it's a catch everybody out with a final crash up in the market before we then struggle through 2022. I don't know when, where, or how, but my sense is valuations are incredibly stretched and they need to come back. So that's really my sort of overall sort of word of caution. What I really need to see from here on in is the real economy to pick up and pick up aggressively to justify the stock valuations that we're seeing, especially in the States, but pretty much all around the world. And from that, on that little note, Paul, I think I'll probably quit. Oh, hey, one more thing I knew what I had to mention. For those of you that have been following me for a little while, you will know that I have been telling you for so long that I think, and Paul will tell you how many years it'll be, that I said coffee was on its way to 250. Well, guys, it got to 230 last week. It has only taken 3 years, but we're finally almost there. So between 230 and 280, I don't really have an opinion about where it's going to go anymore. Just to the fact that coffee is going to get more expensive. I'm afraid that, guys, that when you go to Starbucks, it's going to cost you a few cents extra on your soy almond latte. I can't do anything about that. It just seems to be the way of the coffee market at the moment. It seems that supply and demand are more into balance at $230 than they were at 90, which is where I think we were making those calls for a big rally some time ago, Paul.
Yeah, mate, I was just going to say, I can't remember exactly what you were buying it at, but it seems a long way below 230, mate. Well done. And let's see if it gets to 250 in the coming months. Thanks for joining us today. As always, mate, great to have your insights. And we'll watch these markets with real interest. They do appear to me, as you're saying, it's really some really key times, some really interesting times ahead. I think, for us, the potential to make some really good money is coming along. I'm looking forward to seeing it unfold and getting your view on it as we go along.